Once again, you're welcome to the Marketplace. I'm Charles Aite, and of course, in this segment, we shall be bringing you all the business stories making the headlines across the country. Of course, we shall also be bringing you updates on the various financial sectors, of which we shall hear the story of Ghana's first female engineer to head the Federation of the African Engineering Organizations, and she says that there is nothing as a male-dominated field of work. Plus, Ghana records trade surplus of 2 billion cedis for last year. We'll tell you the reasons why. As well, the labor expert has been raising some concerns regarding the industry. We have all these coming up shortly after this break. Once again, you're welcome to the program. Despite the impacts of COVID-19 on global economies, Ghana recorded a trade surplus of $2 billion in 2020. That's according to data from the Bank of Ghana, of which we have more in this report.
This was equivalent to 3% of gross domestic product. That is total value of goods and services produced in an economy within a period. According to the Bank of Ghana's January summary of economic and financial data, total exports was estimated at $14.45 billion, whilst total imports was $12.43 billion. But comparing it to 2019, the country's trade balance was slightly higher at $2.2 billion. Though coronavirus pandemic had led to partial lockdowns and restrictions in most countries, the nation benefited from diversified exports last year as gold, oil and cocoa raked in more revenue for the country. It subsequently impacted positively on the economy. For instance, gold and cocoa profited immensely from increased prices on the international market. Gold was the biggest export earner, bringing in more revenue of $6.7 billion, representing about 47% of total exports. Again, gold price shot up by 25.4% last year to reach $1,860.7 per ounce.
Strategists is calling on governments to make deliberate efforts in industrializing renewable energy to achieve the 10 various percentage targets set by 2030. According to Dr. Yusuf Sulemana, fossil fuel is a finite resource and will be scarce in the next 2 to 3 decades. He made these comments while stating reasons why renewable energy solutions should be embraced globally. He was speaking on Talking Business with Inshira Ado on Joy Prime.
There are 2 reasons why globally everybody should embrace renewable energy. Number 1, the current fossil fuel regime that we have, that is the world of hydrocarbons, everybody knows that this is a finite resource. Finite resource in the sense that it's going to come to an end. And once we have this behind our mind or at the back of our mind that this is a resource that is not going to live with us forever. In fact, most reservoirs, that is oil production wells, give it 2 decades or 3 decades, they will begin to decline. And so as we go consistently, number 1, the fact that this is a finite resource. Number 2, the fact that there is rapid increase in global temperature. It is not a myth, it is not a hoax, it is a reality where we have disparity, so much variation in weather conditions. And so that's why 2015, they had to force in this landmark agreement they call climate change. And what it means is that all nations have to agree to make sure that they minimize the emission of greenhouse gases such as carbon dioxide into the atmosphere, because these are the main contributors to global warming. However, like we excellently ask, how do we juxtapose this with our industrialization? In fact, first of all, we have to go through the transition. And I'm saying that because my understanding is that Ghana, somewhere 2010, we said we were going to achieve about 10% by 2020. And we came to 2020 and we could not boost up to 2%. That is so unfortunate. Now we have extended this target to 2030. Now, are we going to do something different? This target, if we are able to do something different, then we are in to achieve this target. And I can tell you, Inshira, we have huge potential. We only need to give the space. Let's open the space. Let's give the required environment. The government has to make deliberate efforts.
Well, that was Dr. Yusuf Sulemana. He's an energy strategist and senior oil production operations specialist. Some traders at the Dr. Mensah market in Kumasi have endorsed any arrangement by authorities to minimize the spread of COVID-19 at various market centers. The traders fear that the poor adherence to COVID-19 protocol at the market could escalate the spread of the virus. The Kumasi Metropolitan Assembly has indicated the reintroduction of the system of trading as COVID-19 cases increase in the country. Prince Apia has more in this report.
I declare the redevelopment project of the Kumasi Central Market Phase 2 duly launched.
President Akufo-Addo in May 2019 cut short for work to commence on the second phase of the Kejetia Central Market project. Work has, however, slowed due to failure of traders to voluntarily move to satellite markets allocated by the Kumasi Metropolitan Assembly. Nana Ajenim Boateng is the liaison officer for Otumfor on the Kumasi Kejetia Central Market project.
In the phase 2, the UKEF said we should show the social impact of the people that we are moving, where we are taking them to, and be sure that what it is. Arising out of that was a €1 million budget for that purpose. KMA, in consultation with these affected traders, visited the sites of Abinchi, railways, and racecourse. We've got the places ready. To move in, they said, now you're and they are not still not moving. So it's like, let the people know of the cause and effect of these things happening when people are all littered around in the streets and pavements.
At a program dubbed the Let the People Know campaign, city authorities and representatives of Malaysia have been meeting with stakeholders on the state of the project. The review, €87 million have already been released since February 2020 for the project execution.
Some challenges of the day has made the project not fully occupied. Some on the side of the contractor, some on the side of the traders. The government has allowed the first phase of the money to be released since February 2020. We have still not got access to the land to start work. And just seeing that €87 million since February 2020, not even commenced. And in April, Oseche Mensah and the team and the government will have to go for second phase. What do you go to tell the donors or where you go to borrow the money that you've not even used phase 1, but you still want money?
Kumasi Mayor Osei Biantwi claims though about 40% of the area needed for the construction were released, the Christmas festivities affected the initial plan.
As at now, we've been able to give the contractor more than 40% of the space that is needed. But before the Xmas, you are all aware that a lot of arrangements were made to move some of the traders so as to give the area to the contractors. But most of the traders pleaded that that is the period that they also get their money. So we all agreed that we will do it after the Christmas. So now we will have a meeting with the RESEC and that of the leadership of those who are working at Central Market Phase 2, so as not to destroy their business and also not to impede on the project that is going on.
Prince Apia reporting.
Now, government will run a tight budget for this year in order to reduce the pressure on the economy as a result of COVID-19. That's according to Databank Research 2020 review and the 2021 Outlook report, of which Charles Nixon-Yeboah has been looking and gives us more.
This will deprive spending to critical sectors of the economy, such as schools, hospitals, and infrastructure. Secondly, institutions or contractors that get big businesses from government might have to rewrite their notes, but it is a necessary evil because of the rising debt and expenditure, which, if not checked, could throw away gains chalked by the economy. Databank Research said fiscal consolidation is inevitable this year as the public debt ratio has crossed the maximum early warning sustainability threshold of 70%. It's therefore forecasting a compression in the overall budget deficit to between 8.10% and 9.10% this year. Coronavirus shocks undermined commitment to financial discipline last year. prior to COVID-19 pandemic, the key risk to Ghana's 2020 fiscal operations was the expenditure leading up to the December general elections. This was evident in the original 2020 fiscal deficit target of 18.9 billion cedis, below the 5% limit imposed by the Financial Responsibility Act. However, the fiscal cost of the COVID-19 pandemic imposed an extra financing gap of 25.3 billion cedis. This comprised of revenue shortfalls of 13.4 billion cedis and additional spending of 11.8 billion cedis.
And you're still watching The Marketplace. We'll be right back after this short break this day. Bank of Ghana says the impact of COVID-19 on the banking industry's performance was moderate as banks remained liquid, profitable and well capitalized. Now, this was disclosed in its 98th Monetary Policy Report. Charles Nixon-Yeboah has more.
According to the Bank of Ghana, the banking sector performance remained strong throughout last year, with robust growth in total assets, deposits and investments. Solvency, which is the ability of a bank to meet its financial obligations, and liquidity indicators remain strong. At the same time, the banking industry's capital adequacy ratio, which is the amount of capital a bank retains compared to its risk, was also well above the regulatory minimum threshold as of December last year. With regard to earnings, profit before tax increased by 27.2% to 6.1 billion cedis. Though a little below that of 2019, the earnings was appreciable based on the impact of the coronavirus pandemic. Net interest income, largely from loans and investments, contributed significantly to the profit, growing by 20.9% to 11.2 billion cedis. On credit, the central bank said the implementation of the COVID-19 related regulatory reliefs and policy measures helped supported lending activities. The 23 banks provided support and reliefs in the form of loan restructuring and suspension of loan repayment to cushion 16,694 customers severely impacted by the pandemic.
Now, Ghana has secured $6.5 billion in revenue since it started commercial production of crude oil in April 2011. Now, this was contained in the 2020 Annual Petroleum Holding Fund report. George Raffi has the details.
The report revealed that these were earnings, so let's say what the country got in terms of Ghana's share of crude exported since April 2011. They were also realized from taxes that were paid to the state by all the companies operating on the country's oil fields. It also revealed that since December 2019 to 2020, our earnings has just gone up by $700 million to hit $6.5 billion. And the $6.5 billion is coming from revenue realized from 5.4 billion barrels of crude that were lifted and exported during this period. Based on the report, all the foreign oil firms since April 2011 have paid about $1.2 billion to the state in the form of taxes and rental charges. So how has these funds been used or disbursed during this period? Well, according to the report, $2 billion has gone to the Ghana National Petroleum Authority to finance its operations. Also, $2.5 billion has been advanced to government to finance some projects that were identified in the budget over the years. $582 million was put into the Ghana Heritage Fund, that is a fund that is supposed to be set aside for future generations, whilst the Ghana Stabilization Fund had about $1.3 billion, totaling $1.9 billion for these funds that were set aside. However, due to some deductions that have been made, it is now left with $844 million. However, some have raised concerns about the returns being made on these funds, even though it's argued that their nature of investments are strictly guided by the country's laws.
Well, President Akufo-Addo is being urged to, as a matter of urgency, reconsider the directive on the indefinite suspension of events such as weddings, concerts and parties. In his 23rd address to the nation on measures by governments to curb the spread of COVID-19, the president added that private burials should not exceed 25 people. But the Event Vendors Association of Ghana they're saying that its members could lose millions of cedis due to the new directive to curb COVID-19. According to the president of the association, Kate Hassan, events can still be organized with strict adherence to to COVID-19 protocols. She spoke to me earlier on Business Live.
From his last announcement 2 weeks ago, I knew it will come to that, but we didn't expect it to that level of total ban of events. We were thinking maybe numbers will be worked with and more restrictions will be given to us. But we heard yesterday a total ban, which left us dumbfounded because we have events in the pipeline, and we know with the kind of event that we do, it's a chain. I mean, it's a value chain. It goes through a lot of process before an event is held.
How much are you losing out of it?
Millions. Imagine the kind of event that goes on. You know, we event A to Z, Monday back to back. There's always event, be it social, be it corporate. Event goes on, and this is, I mean, it has really hit us hard more than even last year because we least expected.
You know, last year we had interactions with some of the members, and they have laid off workers. They've closed down their shops. Is there going to be a replay of this?
Exactly. We even started today because clients are calling us for refund, and the whole thing is too it's hot for us, so we don't know what to do.
But Kate, don't you feel that most of the members are shooting themselves in the foot because you visit event centers and most people are just not adhering to COVID-19 protocol?
You know, as event people, we tried our best. We are working with a lot of people, and to even go around, put your mask on, it wasn't easy. And as the association, we wrote a proposal to the ministries that they took some of the proposal and it was read by the president as protocols. So we told the GTA that we want to partner with them because we are on the field, we know our people, so that we can regulate the event that goes on, so that all the safety protocols will be adhered to. But we didn't get anything out of that, and it was like we have the association, but we are a lot.
So now that this directive has come to force, what's going to be your next plan?
The next plan is we don't want any casualties, and what is already going on it's too much. People are dying, and we are of great concern to that. But what we are pleading with is the government should look into it because, I mean, breaths are taken from people's mouth and livelihood has come to a halt, and it's so disturbing to us. So if they can do something about it to regularize it for us to be able to start work.
Kate, let's just rope this one in shortly. Initially, you stated that most of the members were not beneficiaries of the stimulus package. What has been the update so far?
We've not gotten anything. We didn't get anything. Not that I know. None of my members got anything out of the stimulus.
And even as the Vendors Association raised concern about the strict restrictions, we shall be following up to give updates as and when we do have them. But in today's edition of Manila, the Executive Director of Financial Literacy for Africa, Dr. Richmond Kwame Frimpong, is educating us on the reasons why we should avoid multiple debt. Take a listen.
That lead many people to money stress. We have learned two things already. Today, we want to learn that if you want to be financially well, avoid taking multiple debt from multiple institutions. Many people have taken debt from more than 2 different banks, and they are doing dual deductions at the same time. When you do that, you are not leveraging on the multiple deductions that gives you a reduced interest. That is simply to say that if Bank A and Bank B are taking different debts at the same time, usually they have different terms in terms of interest of payment and even the deduction systems. If you don't do it with just one bank, then you are going to be paying double for almost the same debt. Advisedly, if you can, stay with just one financial institution and take just one debt so that you don't multiply the effect of your debt and you get more income on your hands to make you financially well.
And that's how we end Marketplace. But be rest assured that at 5 p.m. on Business Live, we hear the story of Ghana's first female engineer to head the Federation of African Engineering Organizations, who says that there is nothing as a male-dominated field of work. We get to hear her story at 5 p.m. Do stay tuned for that. But in the meantime, we're grateful that you joined us. For more news, do log on to myjoyonline.com. Have a good afternoon.